Joining me now is Phil Green, Frost Bank Chairman and CEO. Phil, how do rising rates really change the game beyond the expectations we've already seen show up in the market?
Well, John, thanks for having me today. We're really positioned well for higher rates, and man, we've been waiting for this for some time. We've seen inflation on Main Street for a good while now, and we've been moving our balance sheet more and more into liquid instruments. In fact, if you look today, 30% of our balance sheet is in a checking account at the Federal Reserve, earning 15 basis points. So we're really watching the short end, and we're hopeful that we'll see some movement up in the near term.
So what happens when perhaps consumer and business appetite for risk also starts to slacken off, maybe even more than the interest rate increases themselves have an impact? I mean, we're at such a low level now, even 3 increases, probably won't do that much. But if they shift the mindset and the sentiment, that they could have an impact. Have you thought about that?
Well, if you're talking about shifting it so that there'll be less activity, I guess that's possible. That's probably what's partially behind what the Fed wants to do. But honestly, we're seeing so much demand today that it would be hard to imagine that some modest increases, like you had mentioned, would really shut things off. We've seen really good growth in our loan portfolio consistently since the June inflection that we had, and that really happened through the Delta variant, and so far we're seeing it through what's happening with Omicron. So we're hopeful that we'd continue to see good activity in our loan book, and we'd expect that.
I also mean, for the consumer part of your business, the types of services that consumers demand. Maybe there's a shift away from trading type products, like the Robin Hoods of the world, which we've seen fall in the markets, and maybe towards savings products, because maybe you'll actually be able to earn a little bit more of a fraction on your savings.
Well, I think that's a good observation, and they will be able to. And so I think you'll see some more demand as prices go up. Savers have really had to bear some of the brunt of this policy that we've seen.
So what does that do to the whole movement in fintech? And I'm not talking about companies that get called fintech. I mean financial companies, even like yours, that are trying to offer experiences and services to consumers, to small businesses, et cetera, to better serve them. Where are you going to have to put that investment in an environment where you expect rates to possibly rise for the foreseeable future?
What we're doing on investment is we are implementing a hybrid model where we're taking great technology and we're marrying it with high touch and physical presence. We've been expanding our locations, doubled our locations in Houston. We're in the middle of tripling our locations, beginning that process beginning in January for our Dallas market. So we are combining the high touch part of it with high tech. So we're investing across the entire spectrum, and we really believe it's going to help us. And we're actually seeing great account growth today. In fact, as of June of this year, we exceeded our all-time high annual growth in new customer acquisition. And we've seen that continue to follow on in September.
What do you expect to happen with lower income families and customers who've been hit so hard by the latest inflation and also tend to be either unbanked or underbanked? Is there the possibility of technologies stepping into the gap with rates rising to help that customer?
I think so. I think that we need to be cognizant of the impact this is having on individuals, and inflation is a tax on them. So it's something we need to be careful of. I think you're seeing not just neobanks, but you're also seeing the banking industry respond. Take us, for example. We introduced the early payday product just a few months ago, where you get your paycheck 2 days early. That was a high value proposition for fintechs. And we also, back in earlier this year, implemented what we call overdraft grace, where we'll pay your overdraft $100 and below at no charge, as long as you have a small direct deposit with us. So those kind of things, I think, are helping people through this period of time.
Yeah, those moves potentially big. That's real money. Phil, thank you.